Just wanted to hop on here quickly and go through a trade from this week on New Zealand dollar. I know a lot of you guys took this trade, and there is some amazing case studies in the community already. I just wanted to hop on and go through it step by step and the breakdown of the overall process. Reason for this is had a few DMs asking how do you identify order flow. Also, sometimes people getting involved in the market a little bit too soon, taking an L, and then their overall theory, working out and price going without them. This trade here gives you 3 entries to potentially take, depending on your plan and your entry model. But I just wanted to run through it like sort of a top-down analysis, and of course post my first video now that I'm a team member, which is a huge achievement for me. So thanks again to Brad and Phantom for giving me the opportunity, and hopefully be able to produce some serious content for you guys, and look forward to seeing everybody's success and journey through 2021. So I'm not going to waffle on, I'm just going to get straight into it. So I have already cut price here. I'm just going to go through the process top down. So on the weekly, you can see that we've got this area here as a potential weekly POI. Obviously we've had breaker structure here, breaker structure here, breaker structure to the left, so we broke multiple structures. So something to keep in mind. Obviously I do map these out. I tend to hide them on the other time frames because it's just such a big area, but I'm always aware where this is and what we're potentially playing off or into. Could say you've got some form of equal highs here, some form of liquidity sitting above. So we have had a reaction off of this already, but price, as you can see here, we're really bullish. Obviously we've broken to the upside here, and since then, every week we've just been pumping higher and higher. We haven't really had any pullbacks, corrections, nothing. Left some imbalance below, so potentially a short to this region here is definitely on the cards. Could be very possible now that we've filled this imbalance here. But my overall idea is potentially a long, which I will go through. So then drop into the daily quickly. Come on. Right, so on the daily, you can see that we have, I'll just zoom in, have this sort of area here. They're not the cleanest. I actually used this one here. But again, you could just grab, because these are areas of interest, right? So you can just grab an area, because obviously you're not trading solely off of a daily order block. So sometimes if it's messy and you can't refine it, what I'll do is I'll grab the area and see what price does when we enter this area. Bearing in mind as well, obviously we're in a weekly, and the imbalance is, after this candle, we then broke structure quite aggressively, leaving behind imbalance. So I actually used this one here, which price did tap into. I'll just drag this across. So we tapped into this, didn't mitigate the 50%, which is normally when I would class a area of interest, POI, order block, as mitigated and no longer of any use or value to me. We simply sort of tapped in, filled the imbalance, and we dropped. Now, obviously, you could say, well, why are you looking to long this? You're coming off of this. And of course, I'm fully aware that, we've had a reaction to this area. I do believe potentially we might mitigate further into this daily. But for me, for us to become bearish on the daily, I see this as one leg. It's one push up. So until we were to break this level here, I'd still class this as an uptrend on the daily. Obviously we have some equal lows here as well, so price may well want to sweep these first and then could continue higher. But obviously if we break this level, then I would no longer be looking to long this. It starts to all become a little bit clearer as you drop down time frames. So let me just go back to that. So obviously even on the daily, you can see we've had a real rally up, a big push up. We've had a minor pullback and mitigation, and then we've broken structures to the upside here. So broken structures to the upside here, looking at where potentially price could come back to. So you have this candle here that then caused the break of structure. So this was unmitigated. Obviously this candle is now inside it. So I'm weary that potentially we are in a daily POI. Obviously we reacted off of a daily and weekly, so I'm just building my trade idea as to, you know, what sort of suits me best for expectation of order flow. Are we gonna, you know, we've put in a higher high here, are we gonna put in a higher low and then create new highs, or are we gonna break structure here to the downside, and then obviously you'd be looking for shorts. So at the moment, again, like I say, you're not setting orders on these areas, you're just simply, you know, waiting to see what price does when we get there. So drop into the 4 hour now. I have this breaker structure marked out here, which is also obviously the daily breaker structure. The reason I like this area here is because we broke structure to the upside over here with this push up. We then came back down, swept these equal lows, mitigated something to the left, and then we've had a push, a pullback. This obviously didn't break any major structure. We've pulled back, mitigated something here. So you could say that you've got, again, potentially, come on mouse, you've got mitigation here, obviously swept some liquidity, you've had a reaction, you then came back and you've mitigated again what caused that sweep. So mitigation here, then you've had a push up, failed to break structure, but you've also failed to put in new lows. So then what happens is we break structure with some aggression to the upside. So now you have this area here that you could have marked out, which would have worked out for you if you'd taken a trade off it. You know, as you pull back here, you could have longed this up to the top. This was obviously before we actually got to that daily, so that would have been a solid trade. But you also have where the move potentially originated from, which, looking up here, you know, we do have some healthy price action, and we have some imbalance here, which I'm mindful of. But for me, as we've had this wick down, we've then pulled back, mitigated the wick, and then we've broken structure instantly. Again, that's another sign of possible order flow and potentially protected lows. So my idea here was this area here is of some significance to me. Oh, it's not too. Ah, nah. Come on, don't be like that. Right. So you have this 4 hour here. I've refined this from the last sell before candle because obviously it's a much bigger area. You can use this as, again, it's simply an area of interest. I've just simply refined it. What you have to remember sometimes, if you refine it to such a small area, price may miss you and then go the other way, and you might be wondering why. Potentially, obviously, you know, the true order block POI would be the last sell before here. But for me, that's just too big. I'll refine it to this little area here. Mindful, of course, that we do have some imbalance. So you could just put this to the imbalance there. And obviously, if you've got a reaction simply off this imbalance, you are potentially, you know, you're inside this order block. But I've refined it to this one. Again, you know, test this, guys, see what, you know, works for you. Now, obviously, you're probably sitting there thinking, well, we've broken structure to the downside here, so why am I looking to long it? Obviously, previously, I showed you on the higher time frames what my expectation was. So this is one push up. Hang on 1 second. So you've had a push, break of structure, pull back, break of structure, weak break of structure with a wick. We've then pulled back, failed to put in a new low, wick braked above this, and then we've broken to the downside. So you could say now that the expectation is, the expectation now is potentially we might form a lower high, and then we could continue lower. But we also, if I just remove that, we also remember that the daily trend at the moment for us is bullish. So this potentially is our last point of interest to take this higher. And I'm more than happy, because we've got, this is unmitigated that caused this aggressive move up. I'm more than happy if this sets up in this area to take this long. So I'll mark this on, obviously, that we've had a breaker structure to the downside. There. So we've had a breaker structure to the downside. Obviously now all I'm doing, and you know, a lot of people are asking how many trades do I take on this higher time frame approach. I think one thing people have to remember is obviously patience is key. You don't need to be in the market all the time. You know, last week alone, there's like 200% off of like 4 pairs, which is absolutely ridiculous. You know, you could finish for the year. So in response to how many trades do I take, it all depends if the setups are there. I trade sort of 6-7 pairs. And I would imagine, you know, 4, 5, 6 trades a month, sometimes 10. Obviously, you never know, but I would always have a setup. So what I would do is set an alert just before this POI, and until price gets here, I'm not interested. Obviously, if we develop further, then, you know, I will look to see what the market's doing. Obviously, we've also got equal highs here, which the market's left behind us. It's really important to notice what the market's doing. You know, it's showing us and it's printing this liquidity for when it returns back to this area. We have some imbalance as well, which hasn't been mitigated. And then if you look at the top here, we had this break here, which was a substructure break with a wick. We came back, we mitigated this area here. There's no real imbalance. Then we pushed down, again, wick break, pulled back, mitigated some imbalance, and then we've dropped off. But it's left areas for us to potentially target. So now I'm just waiting, obviously, for price to do its thing. So now we've tapped in. Obviously, my alert would ping. This is 6 a.m. in the morning. So I would be obviously on my chart. I trade London and New York. And for me now, it's a case of dropping down and seeing what's in this POI. So also, just quickly, I will always check if we have like an hour or a 2 hour POI inside. In this case, I think the 2 is a little clearer. So you have this bunch of candles here again, which isn't perfect. So you could quite easily take the whole range as such, or you could use this bigger candle again, which we highlighted on the 4 hour. But for me, again, it's just too large an area, so I will refine it always. So I would have refined it to this one here, because obviously this one engulfs, then this one doesn't really do anything, then we get the engulfer, then we obviously break structure with aggression. So for me, this is the candle that I've highlighted that I'd be interested in. So then drop into the 15-minute. I always have a look left just to see if there's anything inside that you know, potentially needs to be aware of, imbalances, anything like this. On this case here, you know, it's all looking pretty healthy. Price hasn't really left any major imbalance for us. The only point really being is this wick to this wick here that I'm interested in, and of course the overall POI. So what I do now is, if I just go back, I will now look to potentially set up and frame my idea for a trade. So obviously most of my executions are on the 1 minute, the 3 minute and the 5 minute, depending what's clearest and what gives me the best setup. So as you can see here, prices come down pretty aggressive. So for a 5 minute breaker structure, for me personally, you've had this breaker structure here, but price has come in pretty aggressive. So you could say the swing point for this realistically is going to be this level here. By the time I wait for that potentially to go, I might have missed a trade. Obviously these do, you know, I say be patient, but at the same time be on the ball when you're in these areas, because price, it won't hang around. It will sort of, you know, in and out before you know it. So I actually would have taken this on the 1 minute, purely because the way it's set up was a lot cleaner, and I just want to go through my thought process. Like I say, I know a lot of guys have already covered this, but I just think it's a really good example to show you what I look for before I enter a trade. So obviously price comes in, it taps in, you know, now we're well and truly London open. Wouldn't obviously be looking to take this area here because there's no breaker structure there, and even if there was, I wouldn't jump at that. All we've done is printed equal highs, which again, at a later date, these are going to get taken out, and that's all price is doing. It's manufacturing liquidity. You've got trend line liquidity here, you've got equal highs here. The more and more you look for it, you start to see liquidity's everywhere, and when you understand liquidity, you're on the right path. The last thing you want to do is become liquidity. If you can't find the liquidity, as Phantom says, you are the liquidity. So it's really important to understand and you know, mark out these areas. So we've had a break structure to the downside. Okay, cool. So at the moment, you know, price is looking like it's not going up yet. We've come in quite impulsively. So let's just see if it sets up. If it doesn't, no problem. Haven't taken a trade, not a worry at all. So what we do here is we get a breaker structure. You could say as well, you've had some equal lows developed here, which price has now swept. There. And obviously we've got these equal highs here. But realistically, at minimum, you're looking for a breaker structure, you know, on this level here, which, you know, is more like substructure for now. And we'll see how price develops. So obviously playing price on, you know, we get that breaker structure. We also sweep these equal highs and we mitigate this area here that caused this big push down. So obviously we broke structure again to the downside. So now we've had a mitigation of this. Cool. Are we going to now be happy to risk an entry on this level here, or do we want to see more? For me personally now, I would like to see more, purely because this is just one break of structure on a 1 minute time frame. You know, if you go on the 3 minute, yes, it looks like, right, we've broken structure, but as you can see here, we've pretty much just wicked these lows and just swept liquidity. So I wouldn't be happy to risk my capital on this. Obviously, there's still a large portion of the order block that might have something to be mitigated on a lower time frame, or price might just have other ideas. I'd rather have that solid story before I set an order. So going back to the one, now this was, again, there's nothing wrong with this. I'm not slating this entry by any means at all. You can say this here is a sponsored candle. If you were looking to take this, you could have literally took the 50% of this sponsored candle, because we've swept some liquidity, we've broken structure. This is the area I would look to take the trade, but for me it's not enough to go off of simply that area. I just have a stricter criteria now. Obviously you'd have been tagged in. I have a new rule. I won't take anything with less than a 2 pip stop. So 2 pips would have been well below that order block, and you know, price would have tagged you in and you'd have got a reaction, which is great. You get a reaction straight away like this, you know you've potentially picked the right area. So now it's like, right, have I missed it? Oh my god, what am I going to do? Now this is where it really becomes important to not rush and panic and think, oh my god, I've missed the trade, I need to get FOMO, everyone's in it. 9 times out of 10 the market's going to give you more than one setup. So what happens here is we're just waiting now to see if we can get some kind of confirmation of what price is doing. Have we got order flow? And this is why I wanted to use this example. So what we've done is we've come down here, right, and we've had a mitigation. So we've mitigated this area now. So potentially this is telling us we now go and break structure, which we have, not convincingly, but we've broken structure, right? If we now break structure and come back, potentially this may be an area we look to get involved on. For me, there's no real entry criteria here for me. I wouldn't take this trade here at the moment. I would wait for further development, because again, the breaker structure is pretty weak. You know, if you're using this here, you've pretty much just dropped some equal highs. So again, this is where it's important to be patient, let price develop a bit more before you look to actually get involved. Obviously, again, you do need to be a little bit more aggressive, but the patience is where you'll thrive more, because if you just let this develop, you'll see how you could have got into this a lot cleaner, in my opinion. So price now potentially is dropping equal lows, so we just see what happens. So we drop these equal lows, and this is where it's important to really pay attention to and what is happening with price. So drops this liquidity here, right? So equal lows, and then we have this wick, which again, it only goes below by 2 ticks, but that potentially now, if we go and break this structure, is showing us that the job there is done, because we've swept liquidity, we've got another sponsored candle. Are we now going to get a break of structure after this move? Of course we do have liquidity below us, in the sense of we have imbalance, but this potentially is where price is happy and it's done its job. So now you get that reaction, right? So now this has got me thinking, okay, I'm interested, because we've had a mitigation here, a sweep of liquidity, we've broken structure, we've come back, we've mitigated this, we've then correctively gone up, weak break of structure, we've dumped some liquidity, and then we've swept these equal lows, only by the tiniest wick, but this is the sort of important details you need to pay attention to. And again, please test this, but it's really powerful. So we've swept this, so now I'm interested in this area here, because this fits the plan. Sponsored candle, liquidity swept, reaction after sweeping liquidity. We know we've still got these equal highs to target along with all this imbalance. Yes, we've taken out these equal highs here, but that's fine. Price is fueling up for a bigger move. And we know that long term this move, come on mouse, don't die on me. This move has obviously got real potential to the upside. So again, like I said before, I have a rule, 2 pips minimum stop. So my stop loss would be there. Now again, you can cover this. I'm not saying use 2 pips. There's nothing wrong with going, I'm not sure, I'm going to cover it down there, right? 6 pips. Still going to keep you well within the trade, and if the trade idea is valid. But to be honest, if it's valid from this area, it shouldn't really go below below this. You may get a little wick below, but it shouldn't really go below. Or if you're not sure and you would trade off of both, again, a question I get asked a lot. There's nothing wrong with taking both areas. Let me just tidy this up a bit. There's nothing wrong with taking both areas and putting half risk on both. So you have an order there, and then obviously you'd have an order here. There's absolutely nothing wrong with that at all. But for me, I'm happy to take this because I've seen this play out a lot of times, especially from the area that we're in. So I'm more than happy to take this trade from here. So set my order now. I'm happy. I'm convinced that, you know, I've built a story behind this. And now I just wait to see if price comes and tags me in, or if it doesn't. And if it doesn't, it's completely fine. Again, please, like, you know, you don't have to have the stop that I've got. You can have a larger stop. So let me just move that. You know, so move this across. Right, so you get tagged into this trade now, right? And the spread's normally pretty good on NU. So, what's that? 7010, 70-104. So you'd have stayed in that for me, especially on IC and my FTMO. But again, you know, let's move to 1.9, so 2 pips. 2 pips is my minimum, but again, sometimes I'll have 2.5 if I'm unsure, if I want to cover some imbalance. There's nothing wrong with them going a little bit larger. I'm just a little bit greedy, I guess, and I want that better RR. But for argument's sake, I would take this with a 2 pip stop loss, and then it's literally about, right, now what happens next? So again, you get a breaker structure here, right? And we have now broken this level here with a wick, and then we break it, you know, pretty aggressively. Again, it's only the 1 minute. So drop into the 3 minute now. One thing I wanted to just quickly go over also is where I sort of check all time frames. As you can see on the 3 minute as well, we've also got a sponsor candle. We've had the equal lows and we've had the wick below that swept those equal lows, and then we've broken structure. So for me, this gave this much more probability than this one, because this one here for me is not an entry candle that I use. This one is. This is a really like an A+ setup for me. So seeing that it's the same on the 1 minute and the 3 minute gives me a lot more confidence that this is the better entry overall to take this trade. Again, there's nothing wrong with this. I just like to see more confluences. And as you can see here, we've had order flow, order flow, order flow. We've got mitigations, mitigations. So potentially now, you could say, well, you've got another area here with imbalance and some liquidity that price may gravitate back towards before pushing off higher. So again, if you wasn't in this trade, you could look to now develop a trade, you know, another entry, or of course a scaling. So price has broken structure, we've dropped some liquidity. You know, if you're already in it and you don't scale in, then that's fine. You don't have to scale in. It's just showing you what you can do and how much, you know, patience is important. So I'm just going to move this out of the way. So now you've got like this sort of range area here, which isn't the cleanest, to be honest. Not something I would trade off. And if I was already in this and this was so close to my entry, I wouldn't be looking to scale in personally here. It's a little bit aggressive for me, especially with, you know, I'm going to be looking to hold this to the upside for some time. But if you was, obviously price sweeps this liquidity. Believe the 3 minute is a little cleaner, and you get this candle here where you could set an order on this. This one here. Again, you know, if you want to cover the order blocks, 3 pips, there's nothing wrong with covering these lows here. You know, price tags you in. Obviously these are like, you know, this is sort of bang on New York, so you potentially ride on New York momentum, and this is a scale in, which again, there's nothing wrong with this. You could have took this as your actual initial entry if you didn't like these, because now you've seen order flow, order flow, order flow, order flow. You know, you've got mitigation 1, mitigation 2 because you swept the liquidity, then you've got mitigation 3, break of structure, drop liquidity, mitigation 4, we literally came down to some imbalance. But if you go on the 3 minute, you can now see how everything's healthy. Okay, mitigated, 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 mitigated. So potentially now, if price is going to move away, this is where we're moving away from. So once you break this structure, or you're running, you know, again, depends how you manage. I'd be looking to take the trade to break even. But I don't go break even in the sense of putting my stops at break even. What I do is I take off enough to cover my risk in partials, and then I let the trade run. And again, this is another good example as to why I would do that, purely because price does sometimes come back to your entry to revisit, gather some more orders, or mitigate something before pushing off. And if you go break even and it takes you out and goes, obviously you're going to be pretty devastated. So this is just a great way of showing you why that's important, you know, not to do. So I think if we drop up to the 15 now, obviously overall my target is, I haven't actually shown that, that might help. So obviously target wise, I'm expecting, you know, a sweep of these equal highs. But I wouldn't be surprised if we don't have a reaction from these areas, because remember, we have broken structure now. Nothing's really that clear. If anything, probably grab this one here, and you know, I'd be like, right, oh, this is potentially our target, so pulling them up. Hang on, little bit small. That one, can I grab that one? Probably not. Right, you get the idea. I'm not going to go through all that, although it's bugging me, so I might do. This one, if you took the first one, right. So potentially, you're either in one of these, or you know, if you're nuts, you're in all three. So now it's a case of managing it, and again, you know, higher time frame analysis, higher time frame targets. It is going to be sometimes a little bumpier ride. It's not going to just rip up to the upside and Bob's your uncle, you've hit your target. It is going to have pullbacks and it is going to have corrections. And this is also why I don't go to break even. I simply just leave them, take my risk off the table and let it run. And I'm not too strict with managing either. Once we clear these sort of highs here, I'll definitely pull a chunk of the trade, because I believe in paying yourself massively. So obviously, you know, this was a little bit of a slow burner. This is why I mentioned not going to break even, because you would have now taken a break even on this, and then price is going to rally again. It tests that area again, and then we rally, right? So now you're sitting there, you've taken a break even on this one. You would have been okay on this second trade, and obviously you'd have been fine on the first one. But if this had been your trade, you've now taken a break even for no reason. Price has rallied off. We've broken structure here, which has now given you the opportunity to take some money and pay yourself. So for me, this is why I use that method. Again, please test it. You know, it's down to you guys and how you want to manage things. And then it's a case of really, you know, once we start breaking free, is where you're going to put stops. Obviously, like I say, you do have to expect these corrections. We've broken structure here. What broke structure? Well, you know, it originated from these areas. We've got imbalance here. Price comes back to test this. So don't get too aggressive. Now, if we break this structure, by all means, put your stops below, or just pay yourself in constant partials. You don't have to keep pulling massive amounts. Again, see here, price comes back again, test this area again. You know, you're potentially taking another break even. If you know, it's not worth it. Like, this is why I still wouldn't have gone to break even if we're up here, because this can happen. Like, we do have to pull back. Price has potentially left something. You know, it's mitigation here, but it never fully mitigated maybe something lower down here. So again, it comes back to mitigate, and then we push off. This is why it's, you know, don't choke your trades, pay yourself in partials, and just sort of, you know, remember, if you're trading the higher time frame, you've got to expect that you're going to get these pullbacks, you're going to get these moments. Obviously, no one likes this. This takes, you know, a lot of psychology to let your trade sit here after it's gone up there. And again, you know, at this point here, that's an FTMO. Like, if you're risking 1%, you've just passed an FTMO. So there's nothing wrong with closing that. I'm not saying hold that to the top. It may well not get there. This may now be it coming through. But what I've done is I've covered my risk on all of them, and I've taken the partials here. So no matter what, I've paid myself. So now if it comes through, it's fine. But overall, I'm sure that this is going to come up here, and you have to back your own ideas and stick to your analysis, right? So we are messing about, and I know a few guys were in this and they were not sure what to do, and massive respect to those that held through it, because I believe they did get to their targets in the end. So then what price does now is it really does start to rally off. And you can imagine how if you were at break even and you took the break even and you saw this, you'd be pretty gutted, right? So we rally off and, you know, bang, we hit our target. Now this was entered on the Monday in the morning, and I believe Wednesday, Thursday you reach this target. But overall that's a 36% trade, again depending on stop loss, and this one is 56 with a 2-pip stop loss, and that one is, again, I believe it's 55 with a 2-pip stop loss, but obviously I wasn't really my ideal trade, the first one. So now, you know, I'd close the trade in full, and or at least 80%, because I'm still interested in these equal highs, but I do expect a reaction here, and you know, this reaction could be now it pulling back, gathering more orders, putting in that lower high to now come down and put in lower lows. So I'm not going to be greedy and hold this, because we're at our target. And as you can see now, you know, we've sort of broken structure, come back, mitigated, broken structure again, but it hasn't completely gone yet. It may well in the week to come, it may well sell off, but it might come back to sweep these, mitigate something above, and then we might sell off. But overall, I just thought it was a really good trade to show you guys how I would approach it from top-down analysis, how I would wait for my area to be triggered, and of course how I would enter, you know, using lower time frames to my advantage, and using like order flow to get in these trades. You know, there's a lot of opportunity here. Potentially could have got in over here again if you wanted. It all comes down to personal preference, testing, but those mitigations, that following of the money, is really powerful, especially when you're getting, you know, a mitigation and then followed by a break of structure, you know, or a sweep of liquidity like this, a break of structure. 9 times out of 10, that's my go-to. So yeah, I hope this helped. Obviously, any questions, please feel free to reach out. Hopefully it all makes sense. If it doesn't, you know, please ask. Tomorrow you've got mine and Sketchy's Zoom. We'll be on at 6. Going to go through some trades from last week, and obviously any questions you guys have got, please feel free to answer, you know, to bring them, and we'll answer them. And yeah, I'm going to stop waffling. I'll let you have your Sundays back, and yeah, speak to you all soon. Hope you have a lovely Sunday, and catch up with you all soon. Peace out, guys.